15. So you've got the inside market here. So where's the outside market? Well, you can see where the outside market is. Here it is here, $73.50. And you can see where it is here, $74.10. Fair value is 60 cents. So it's a 30-cent split. So fair value is going to be $73.80. Okay. So there's your fair value read right there, $73.50. That's where there's a commercial sell order. That is where there's a commercial buy order. And obviously you're looking at the overall shape of this. And one of the things that you generally as a rule look at is how bullish has the book been coming into these types of coming into these trades. Well, of course, you can see going back into the final 10 minutes, the book had been relatively solidly bullish all the way through. So the first thing you're thinking immediately is they're adding liquidity below the market. They must be pulling liquidity away above the market. It looks bullish. So your first thought is that you're probably going to see a price spiking up to 74s, possibly running stops at 74, and then maybe getting an opportunity to lean against the $74.10 level at the top edge. So you start to come into the data itself, of course, and we get the data just about to come out. Data's about to come out. Boom. The first thing that happens is the price does rally behind that book bid that came in just before the data. You can see the price did trade almost exactly to the $74.10 that we've just mentioned. You can see what happened. The price got gobbled up into that top edge and started to pin away from that, giving you the perfect opportunity to get short $74.10 right there. So you can see that that then results in a very, very nice short trade on oil. You can see the price tested it right afterwards. You can see the book is starting to firm up on the offer, which is good news, of course, on a data release. The book is starting to firm up on the offer, and obviously what happens is the oil price comes crashing off the $74.10, and it makes you a fairly substantial amount of money on the short side of the marketplace. Does that make sense to everybody, guys? Pretty simple stuff. Yes? Key liquidity, outside money, fair value, price in the middle. And your job is ultimately to try and trade that narrative against the key commercial supply and the key commercial demand. And obviously what happens subsequent to that is they start bringing in their demand, they start bringing in their supply, and they get closer and closer to the inside price. And that starts causing the liquidity to start forming inside the marketplace. You can see that that fair value price turns out to be the POC of the day, surprisingly enough. Not really. That's what you'd expect to see, isn't it? The fair value of the day is sitting right there at $73.77. That's the POC of the day. And you can start to recognize some of those elements. You can see that the value area high is exactly where the price got to. The value area low is pretty much where they put the liquidity at the low price. Pretty crazy stuff when you think about it, isn't it? That simple, basic piece of value area high, value area low level information gives you some ideas about where the commercial activity liquidity is probably going to be resting. And sure enough, that's what shows up. That's what shows up. Going into the data, value area high, value area low, and therefore when you start seeing that sell at the highs, you see that buy possibility at the lows, you can start to watch those key areas because that seems to be where real liquidity is located in terms of trade. We're going to be starting in classroom, guys, in just a few minutes. So if you want to get your coffees,